The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, friends, to another edition of Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. You can catch my show Monday through Friday on TFNN from 3 to 4 Eastern, just in front of the Tom O'Brien Show. If you can't listen to Breakout Investing live, no worries. You can head over to podcast a few hours after the show and pick up the podcast over there on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi right in your smartphone browser. You can listen to the stream 24/7, and don't forget about Tiger TV. That is a cool feature as well. On the homepage of tfnn.com, channel 1, the show is carried live. It is archived on channel 13 with Tiger TV. Not only do you get the show audio, but you get the video as well, so you can look at charts live right along with me. All right, let's refresh the chart of the Dow Jones Industrial Average. We'll see that the blue chip index is up 130 points on the day, 0.9% gain to 14,258. The Dow started the day 70 points from its all-time intraday high of 14,198, set back in 2007, I believe it was. Some Dow stocks on the move today. Let's start by taking a look at a couple of tech bellwethers in the Dow. Cisco Systems firming up recently at its 50-day moving average. Here you've got a swing point with Cisco at 2167, so it hasn't broken out yet, but got decent volume in the stock today, and it could try to clear that 2167 level soon. And how about HPQ? Hewlett-Packard really has come back to life in spades. That's probably a bit of an understatement. Of course, Hewlett-Packard recently had a powerful breakout over 1745. Another instance where if you'd bought that gap up right here when it broke out over 1745, you'd still be sitting pretty, sitting on a profitable position right now. Shares of Hewlett-Packard up close to 2% to 2032. Looking a bit extended. Would not be buying it up here. A couple of other Dow components. Let's check in on the financial sector, specifically American Express. American Express, recent breakout over 61.97. A few weeks back, it just moved sideways and is breaking out again today. Shares of American Express up 2.1% to 64.19, and another top percentage gainer in the Dow, United Technologies. UTX has been trading sideways, up 2.1% to 91.02. So some good action in the Dow today. We do have a little bit of volume behind today's move. At last check, volume on the NASDAQ was tracking about close to 15% higher than what we saw on Monday, which was below average volume at 1.69 billion. So, yeah, you're seeing a little bit of a volume pop here, but really not that much. Again, NASDAQ volume tracking 10 to 15% higher than Monday. Volume on the New York Stock Exchange tracking between 5 and 10% higher than Monday. Volume Monday on the NYSE was average at 688 million. The way the percentage gains look right now, and we just saw the Dow up 0.9%. Let's check in on the S&P 500. I think the percentage gains are slightly better. S&P 500 up 1% right now, just over 15 points to 1540. New 52-week high for the S&P 500, and the NASDAQ Composite is currently up about 36 points, 1.1% to 3218, and looks like a new 52-week high for the NASDAQ Composite as well. So while it's compelling that major averages appear to be breaking out to the upside today, we are still looking for a follow-through day. Doesn't look to me like, I don't think these percentage gains are going to be big enough for the folks over at Investors Business Daily to change their market outlook. It's possible. I wouldn't put it past them. If volume does end higher from Monday, And we end right now with the percentage gains that we have, with the NASDAQ leading the way, up 1.1%. That to me seems a little bit light. Again, if you've ever picked up How to Make Money in Stocks by Bill O'Neill, the founder of IBD, what he says about follow-through days or buy signals from the market is that follow-through days should not be begrudging. They should convey power. They should be forceful. They should not be on the fence. And for that to happen, you usually need a minimum percentage gain of at least 1.5% to 2%, and a good expansion in trading volume. So we seem to be coming up a little bit short in both areas today. But that said, there's some decent movement in the market today. We did initiate 2 new positions for the Ultimate Growth Stocks model portfolio. I thought the action is compelling enough to at least nibble at a couple of small starter positions, kind of expand our exposure to the market. And I did that, again, because indexes are breaking out. Volume right now is higher than Monday. Even if we stop short of a follow-through today, again, I'm expecting a pretty decent jobs report on Friday. What we know right now is that market sentiment certainly is on the improve. Seems to be getting better by the day, and that selling that we recently saw in the NASDAQ composite, it's still worthwhile paying attention to, but I didn't see any problems with just nibbling at a couple small positions today, just in case this breakout by the major averages has legs. I'll tell you what, early I got back from the gym this morning, and in my inbox was the latest reading from the IBD TIP Economic Optimism Index for the was it the month of I should double check that. I think it was the month of March. Let me just see here. Yeah, this is the first reading in March for the IBD TIP Economic Optimism Index. In other words, the first reading on consumer confidence this month, and it was a pretty dismal reading. What we had is, we've got 59% of Americans think the economy is in recession, but the index itself came in at 42.2, down sharply from 47.3 in February, actually a decline of 10.8%. Readings below 50 signify pessimism, above 50 optimism, but we have three components in the index. 6-month economic outlook, very bearish, drops 18% to 38.8. This sub-index was 32.1 when the economy entered the last recession in December 2007. So 6-month economic outlook, not very good. Big percentage decline there, down to 38.8. Personal financial outlook at 52.2. So that's still in optimistic territory, but it was down 4.4% to that 52.2 reading. And then confidence in federal economic policies, still very pessimistic in terms of confidence in federal economic policies, down 11% in March to 35.5. So pretty dire, pretty dismal reading on consumer confidence from the folks over at Investors Business Daily and Technometrica. But as you can see, the market is shaking it off. The Dow was intent on setting an all-time high today. It did so. Let's see how we close today, and hopefully, this market rally is going to have more legs. If you're long the market, that's definitely what you want to see. We had another piece of economic data today, the ISM Services or ISM Non-Manufacturing Index for February. That came in at 56. Better than expected. The reading in January was 55.2. The estimate was 55.4. So ISM non-manufacturing for February came in better than expected. Coming up for the remainder of the week, we've got the ADP employment change coming up tomorrow. Factory orders, the Fed Beige Book, all that is due Wednesday. Thursday, weekly jobless claims, and then Friday, next potential catalyst for the market that could bring more buyers in from the sideline, the employment report for the month of February. Right now, non-farm payroll is expected to rise by 165,000. The unemployment rate holding steady at 7.9%. U.S. dollar index 82.07, down 0.2% on the day. Let's take a look, check in on the greenback index here. This is, again, you can see the tremendous rally in the U.S. dollar index, and under some pressure yesterday, kind of reversed off its highs. Lower again today, but not by much. Again, 82.07, only down about 0.2% from Monday's close. So weak dollar, but not that weak today. April gold settles at $1,574.90, $1,574.90 an ounce, up $2.50 or 0.2%. April crude oil, $90.82 a barrel, up 70 cents on the session. Bond yields a little bit higher today. 10-year note at 1.89%, 30-year bond at 3.10. Impressive move by CREE today. That's CREE on the NASDAQ. Nice gap up for the stock, up 13.6% today to 50.79. Short interest relatively high in CREE ahead of news today that the company provided guidance for the current quarter. What was interesting is that the guidance was only in line. The company raised its current quarter sales guidance to $325 to $350 million. The consensus estimate is currently at $336, so that is in line. Earnings guidance 31 to 36 cents a share. Right now the estimate is 33 cents. CREE makes energy efficient lighting products. It makes light emitting diodes as well, but the company did announce today that an LED bulb that sells for less than $10 is available at Home Depot stores. LED bulbs use less power and last longer than incandescent lights. So that is the story behind CREE's move today. Interesting, probably a lot of short covering today because, again, short interest was very high in this stock ahead of the news today. But the guidance just so. So nothing that great that I saw in the earnings guidance today. Let's check in on shares of Yahoo. Yahoo got an upgrade today from Cantor Fitzgerald. This is another one that just keeps moving higher and higher and higher, working on 6 straight gains. I see a lot of charts out there that look like Yahoo. It's nice to see the market going up, but you have to kind of take a step back and say, okay, well, what is out there to buy where I would not be chasing or I would not be buying too late? And that is a legitimate question right now because, usually a 3, 4, 5 day pullback for the market is not enough time for stocks to reset, form proper bases. That period normally takes at least 4 to 5 weeks to happen, but markets are so fast moving these days, we get these quick shakeouts in the market that last, 2, 3, 4 days, and then that's the end of it. So very tricky right now because there's a lot of extended stocks out there. Anyway, shares of Yahoo up 16 cents today, 0.7% to $22.86. Yahoo is up about 35% since its initial breakout, and that happened all the way down last year in October when it broke out over 17 or so. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Nice market rally today. Volume tracking a little bit higher than Monday, so signs that more money is coming in from the sidelines. That's a good thing. Breakouts for the major averages, but with the NASDAQ composite only up about 1.1% at this point, outperforming, but a 1.1% gain to me seems a bit lukewarm, so I'm not sure that today would qualify for a follow-through day or give the buy signal that we've been looking for. But that said, I did initiate 2 new positions today in the Ultimate Growth Stocks model portfolio. If you want to see what they are, as well as the 3 names that we are currently long, you can check out 30-day free trial to Ultimate Growth Stocks right on the homepage of TFNN.com. Just go on the homepage to the newsletters tab, then click on investment newsletters. You can check out 30 days free of my newsletter. So we are currently long 5 positions right now. Wrapping up Yahoo. Again, Yahoo got an upgrade today from to buy from hold at Cantor Fitzgerald. But again, Yahoo just a tough stock to buy right now. You can see the initial breakout back in October, and it really never gave you another opportunity to buy. I mean, you could say it found support at its 10-week moving average earlier this year, but still kind of a risky buy. But nice base breakout for Yahoo in October. It's up about 35% since that breakout, so not a stock that you can touch up here. And really that is kind of the dilemma here, because you want to pay attention when the market is showing signs of strength, and that is generally the opportunity to get long. But then you have to step back and ask the question, what is out there to buy? It's still not easy to find actionable buying opportunities. I mean, you're not gonna buy Google up here, right? GOO, working on 7 straight weekly price gains. It broke out several weeks ago, very extended in price. Be great to be able to pick up Google on a pullback to its 10-week moving average, which is down in that 773 area. But Google's not going to do that unless the market comes back, pulls back in price, corrects off its recent highs. So that still could happen. And we'll just see. We'll see how it plays out. But Google, very, very extended. 877-927-6648. Let's head east to Alexandria, Virginia. Talk to Michael. How are you, Michael?
Great, Ken. How are you?
I'm doing fine, thank you.
Good. You know, I hear you all the time. You know, thank you for everything you do.
My pleasure, sir. My pleasure.
Yeah, I had a question on Chihu.
Yes, sir.
It looks like it's breaking out.
Yes, it does. And first of all, let me say I love how everyone is pronouncing Chihu correctly, because for many weeks I was always pronouncing it Kihu, like with a K, Kihu, and then somebody corrected me and said, well, it's actually Chihu, like CH, you know, that CH sound. So,
right. But I've learned it from you, though.
Oh, okay. Well,
I've learned it from you, the pronunciation. So,
you're a good listener then. I'm sure still a lot of people mispronounce it, but yeah, Chihu 360. So they have it is breaking out, and it's a strong stock. And the issue is they have earnings after the close today.
I see.
Yeah, they have earnings after the close, and I'm expecting strong numbers. And I'll tell you what, you know, I've been, you know, doing this for 15, 20 years or so, and, you know, buying growth stocks. And, you know, I have tried buying a growth stock like this ahead of earnings when it's acting well, and I'd have to say that the limited times I've done it, I think my batting average is less than 50%, you know, where you think a stock is acting well ahead of earnings, you buy it ahead of earnings, and then it sells the news and starts to go lower. Now, the thing about Chihu, is that, you know, I think we're going to see a great quarter. I think the results are going to be just fine. The one thing it does have going for it is that you're in a market where sentiment is much improved, right? You've got the market breaking out here. You know, overall sentiment seems to be positive, and, you know, the swing point that we're looking for on Chihu is 34.37. It's at 34.19 right now, so it's trying to break out right now. Pretty good volume in the stock today. I think there's some optimism about the earnings after the close, but this is one where I'm going to wait, see what earnings look like, and then kind of assess the stock and you know, take a look at it tomorrow. But not gonna buy ahead of earnings.
All right, good advice. And I had one more question for you.
Okay, you want to hold on?
Sure.
Hold on. Yeah, okay, we're going to a break. We'll be back in about
all right,
3 or 4 minutes or so. All right, so we'll talk to Michael when we come back, and yeah, we'll see what Chihu has to say after the close today when it reports earnings. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Shares of Chihu 360 now up 4.3% to 34.16 ahead of its earnings report after the close. Look for a profit of 17 cents a share on sales of 93.7 million. That revenue would be up 50% from a year ago. Chihu cleared a swing point today of 33.63. That was its intraday high set on February 20th. Still has its all-time high to contend with at 34.37, but again, hit an intraday high today of 34.75, so it is trying to stage a technical breakout ahead of earnings. We're talking to Michael in Alexandria, Virginia. And Michael, you had one more question?
Yes, sir. United Rental.
Yes.
It looks like it's a very good stock too.
Yes, it is. Yes, it is, and it's showing good technical action. There's no shortage of decent charts out there. There are plenty of stocks that are acting just fine here, and I like United Rentals quite a bit. They provide construction, industrial equipment rentals. You had a nice gap up, big volume in the stock today. It's up 5.7% to 54.99. Let me switch over and take a look at a weekly chart here for United Rentals. And, what we're dealing with right now is if major averages do follow through with conviction. I'm not sure today is going to be the day, but if we do get legitimate, convincing follow through in coming days, charts like this you want to pay attention to, because with United Rentals you had a breakout The breakout week was back earlier this month, week of January 4th, and it was right here. And now what you're seeing is just the first pullback, the first legitimate pullback to the 10-week moving average, which is a reasonable area to pick up a stock for the first time. But if, say, you are if you initially put $10,000 into a stock, you want to start with a smaller amount on a pullback to the 10-week moving average. Maybe invest $5,000 or $6,000. If you put $25,000, if that's your initial buy, maybe you put $12,000, $13,000, about half of what you normally would. So United Rentals to me looks like it's in buying range here. I don't think you're chasing. It's a legitimate pullback to the 10-week moving average, and there's pretty good support out there for the stock as well.
Okay, great.
So.
Okay, thanks a lot.
Okay, good to hear from you, Michael. Appreciate it, as always.
Yeah, thank you for everything. Thank you.
You're welcome. Bye-bye.
Bye.
So United Rentals, another strong stock out there. So what we're seeing right now is it's not so much a multitude of base breakouts that we're seeing right now. Again, a lot of the base breakouts happened earlier this year, January 2nd, when major averages gapped up in price. That's when you had a lot of base breakouts happening in the market. Since early January, the market really has not consolidated that much. We look at pull up a daily of the S&P 500 here, and we'll see the strong move that the S&P 500 made on this day, good solid breakout, and then you basically you had a 1 week, 2 week consolidation for the S&P 500 before just recently before it broke out again today. So because the market hasn't consolidated for any meaningful amount of time, it stands to reason that a lot of stocks out there have not consolidated for any meaningful amount of time. So what we're looking at now is not so much base breakouts, but stocks that are firming up at the 10-week moving average. And one name that is doing that is a home builder, D.R. Horton, DHI. You can see the breakout several weeks ago, and look what it did. It just came down to that 10-week moving average, and is trading up near its high here at 23.79. So it's a good-looking chart. Breakout supporting action at the 10-week moving average, and there's a slew of other stocks doing this as well. BLK, BlackRock. See how BlackRock's doing that as well. But again, it's just 2 weeks of consolidation. I would love to see stocks, form bases for 5, 6, 7 weeks. But for that to happen, you have to have the market, come in more than what it has already. So we'll see that at some point. But right now, the market doesn't seem like it wants to go down, but we'll have to continue to monitor price and volume in coming days. It's not entirely clear to me that the trend has turned decidedly upward here, because again, the percentage gains in the major averages today are probably going to fall short of convincing follow-through. But again, I thought it was worthwhile to put just a little bit of money to work today to just to nibble, dip the toe in the water. Shares of Apple today. Let's take a look at Apple finally participating on an up day for the market and actually holding near its high. It's up $11.80, 2.8% gain for Apple. Last trading at 431.85. Very, very light volume behind the rebound today. Volume right now at 19.9 million shares. Apple on a normal day trades about 19 million. So its volume is probably going to come in just slightly above average for Apple, but you still have a lot of higher volume declines, lower volume rallies in this stock. So probably just a dead cat bounce here. Let's take a look at Qualcomm. Qualcomm had some dividend news today. They raised their quarterly cash dividend by 40%. It goes up to 35 cents now from 25 or 26 cents, but quarterly cash dividend raised by 40%, and they also implemented a new $5 billion share buyback programming that replaces a $4 billion program that was already in place. So I think Applied Materials as well raised their dividend, but shares of Qualcomm up 2% today to 67.96, and raised dividend also at Applied Materials. And this chip equipment maker has also been an outstanding performer, been consolidating gains for a few weeks now, up 1.2% to 1373. Some earnings reports to watch. Solar City. It's going to be interesting to hear what Solar City has to say. They report tomorrow after the close. Not profitable yet. They're expected to lose 44 cents a share, but big top-line growth at Solar City. Sales up 77% to $36.7 million. So small company, but in a good technical setup here. We'll keep an eye on Solar City, and possible that this stock could try for a breakout over its recent high of $20.38. So Solar City been a decent performer, actually quite a solid performer since its IPO in December at $8 a share. So continues to show relative price strength, and again, not profitable, but strong top-line growth worth paying attention to here, plus the fact that the stock remains under accumulation. Take a look at Shuffle Master. We heard from Shuffle Master after the close on Monday, and I keep calling it Shuffle Master. I will probably continue to do it, but they did change their name to SHFL Entertainment. Stock is having a tough day today, down 5.5% to 1511. This is a company that's basically a global gaming supplier. Earnings were down 14% from a year ago to 12 cents a share. That was in line. Sales up 5% to 58.8 million, slightly below expectations there as well. Take a look at some other stocks acting well today. Priceline, PCLN. Shares of Priceline flirting with a technical breakout here. Not enough volume, though. That's the issue here. Stock is up $4.85 to $718.86. $718.86. The swing point that we're watching for Priceline is $721.96. $721.96. That'd be the high that it needs to get over. It hit an intraday high of $723.05. So it broke out just for a heartbeat. But again, volume is light today. You're going to need much heavier volume than what Priceline is seeing today. Priceline normally trades about 635,000 shares a day. Volume right now, 612,000. So it looks like it's going to come in pretty much average. You don't want to see average volume breakouts. Always want to see conviction behind the buying. Now, at last check, I think volume was pretty heavy in TripAdvisor. TripAdvisor, similar industry to Priceline, but this is a company, as its name would indicate. It provides trip advisory services for travelers, but the stock is up 4.6% today to $47.62. 2.1 million shares have traded hands so far. Average daily volume here is about 1.8. So volume starting to expand at TripAdvisor. You can see it still has a swing point to conquer its prior high of 49.35. So not a true breakout yet, but another growth name out there acting pretty well in this market. NationStar Mortgage Holdings. We mentioned this one in the letter that I put out earlier today. I update Ultimate Growth Stocks every Tuesday. I put out an extensive weekly update, and then in between weekly updates, I do buy alerts, sell alerts, general market updates. But NationStar, we're going to keep a close eye on this one. They report earnings Thursday before the open. As you can see, working on 6 straight up days, flirting with a breakout here over a swing point of, well, the original swing point was 40.61. 40.61, that was its high over here, and now it's got a new swing point of 42.24. So not out of the question that we could see a breakout from NationStar Mortgage Holdings. This is a mortgage servicing company. Earnings again Thursday before the open. Really has a nice look to it. In fact, you look at the weekly chart for NationStar and you'll see a nice looking base on base pattern forming. Okay, here's your first base that formed, rallies less than 20%, settles back into a new base here. Again, your swing point just over 42. So we'll keep an eye on this one for a technical breakout. Really does have the look of an emerging leader. The fundamentals here are solid, and when they do report on Thursday, I don't think there's any doubt we're going to see a big quarter of growth and probably a pretty nice outlook as well. So that's a look at NationStar Mortgage Holdings. And another name we're watching from China, Mindray Medical, flirting with a breakout here as well. This is a medical device maker. Mindray flirting with a breakout over 38.79. The swing point set over here. It was last trading at 38.60. Hit a high of 38.68. So it's holding near its highs. Again, volume, not too bad, actually. It normally trades about 800,000 shares a day. We're close to 1 million right now, so seeing a little volume expansion. And this is a stock that definitely has been under accumulation for the better part of this year. So Mindray Medical is another name to watch here. Has the potential to do well. So, you know, these bullish technical setups that we're talking about, you like to see them when the market is breaking out to new highs, because the stocks that have the best chance of outperforming when new money is coming in from the sidelines are not those necessarily near 52-week lows, but those that are asserting strength, that are being accumulated, that are actually near highs. That's one of the great paradoxes in the market. But when the market's breaking out, you want to look at stocks that are breaking out as well. They can often go on and be big leaders. Check in on, I pulled up a chart of Cree earlier. This is a very similar technical setup here. ValueClick is a digital marketing company, and you can see the big move it made earlier this year on strong earnings, and then it just started to move sideways. ValueClick is up 1% today to 27.21. Cree showed very similar technical action. In fact, let's look at see if we can look at the daily chart for Cree. And, same type of deal where it gapped up in price, then moved sideways, held on to its gains, and it gapped up again today. So ValueClick showing similar action, gap up in price, sideways movement, and not out of the question that we could see this one continue higher as well. So ValueClick looking pretty good here. So let's check in on the markets one more time here before we head into our next break here. Let me pull up a chart here. Here's let's see where we're at. And we'll see. All right. Well, NASDAQ strengthening a little bit into the close here. Now up 1.3%, 41-point gain for the tech index to 3223. S&P 500 up 1%, almost 15 points to 1540. And the Dow up 129 points, 0.9% to 14,256. So, again, general take on things. We're going to certainly welcome a strong showing in higher volume like today. It's probably going to fall short of giving us an official buy signal, but I did take the liberty of just nibbling, kind of wading into the market, tried on two more long positions on for size today. Not entirely clear that this market is ready to continue to head higher, but nice breakout for the major averages. We'll take it. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you. 5 minutes left to go in Tuesday's session. Let's check in on the major averages one more time before we wrap up today's show. So yeah, nice gap up for the NASDAQ Composite today, currently up 1.1%. Okay, so it was not that long ago, up 1.3. Not holding near its highs. That's the important thing. Last trading at 32.18. NASDAQ volume right now tracking about 10% higher than what we saw yesterday. 1.69 billion shares on the NASDAQ yesterday, so 10% higher. That is going to take us to, what, 1.9, 1.8, 1.9, something like that today. Volume on the New York Stock Exchange tracking 7% higher than Monday. Monday volume on the NYSE was 688 million. So nice gap up for the NASDAQ Composite. Volume looks to be higher than Monday. S&P 500 also trading near its session high. S&P 500 up 0.85%, call it 0.9% gain, about 13 points to 1538, and the Dow Jones Industrial Average up 115 points, 0.8% to 14,242. Let's just for kicks, we'll check in on the Russell 2000 small cap index. We'll see that it has not cleared a resistance level yet, trading at 926.35, up a little better than 1% on the day. And while we're at it, why don't we take a look at one of the more broad-based indexes out there, the NYSE Composite Index, and we'll see that's a bit of a concern. That one's only up about 0.8%. So this is probably the broadest based index out of all the ones that we've been looking at today. NYSE Composite looks like it's lagging a little bit, only up 0.8% to 89.71. Doesn't look like it hit a high today either. So overall, not a bad day for a bad day of performance for the market. It's probably going to stop short of follow through. So we're going to want to keep an eye out sometime this week. Maybe it's Wednesday, Thursday. Maybe it's a better than expected jobs report on Friday that ultimately fuels a big percentage gain in higher volume for the major averages. That would give the green light to buy and start looking for stocks with strong fundamentals and technicals. By and large, there are enough good-looking charts out there. Stocks showing strength, stocks holding on to gains, stocks holding above support. That is a positive for the bulls. Of course, the one thing that the bears have going for them is it until proven otherwise, it is a market, strange as it sounds, that is still under distribution. Remember, February 20th, February 21st, February 25th, we had some very bearish days in the market. Higher volume selling, institutional selling, and then we had that nasty reversal on February 28th in higher volume as well. So the bears can still make a case here. But if you were short because of the recent signs of institutional selling in the market, that has turned into at least a somewhat painful position, at least over the past 5 or 6 trading sessions. So tough to be short. Easier to be long right now, but without a follow-through day, the market there's still some risk up there. So you just want to manage positions properly. So again, with the 2 new initiations today for the Ultimate Growth Stocks model portfolio, they were just nibbled, didn't make big bets. We're just going to nibble, see if they work, and if they don't, and the market starts going the wrong way, hey, we're never afraid to cut losses short, keep losses manageable. That way we can always live to see another day. Coming up next, the Tom O'Brien Show. Hope you have a great rest of the day. I'll be back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. We'll see you tomorrow, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.